Have you thought about the COVID after effects? 2020 March, when the COVID came in, we were flabbergasted. What's going to happen? I got so many calls saying, अभी क्या होएगा, मार्केट नीचे जाएगा, हमेशा के लिए नीचे रहेगा, 5 साल के लिए सब डूब गया, सब बेकार हो गया. Fast forward, September, Sensex moves from 25,000 to 40,000. November, 42,000. December, 46,000. January 2021, when I'm shooting today, 3 days back, it was touching 50,000. So from 25,000 March, it's gone up to 50,000 just about 10 months. What are you supposed to do? Are you supposed to buy, sell, invest, redeem? What action to be taken? Or are you confused and you don't know whom to ask? And in this episode, I'm going to talk about what you should be doing when the markets are going up and down. Hi, my name is Taressh Bhatia and I'm a financial freedom specialist. Do subscribe to my YouTube video to get the notification on time about the latest videos which are coming up. In this episode, I'm talking specially about the situation where India's Sensex, the market barometer of investment, has touched 50,000 in its lifetime. From 100 in 1979 to 50,000 it has touched. It's a milestone. At this point of time, you might think, what should I do? Well, there are a couple of situations, couple of guidelines, couple of ideas I will give you. But my disclaimer, do not go blindly by what I'm saying. So do consult your financial planner and investment advisor to understand where you are, where your funds are, what your situation is, how you should be acting and reacting, and then take action. But to demystify and to clearly understand what you should be doing or not doing, this video will definitely help you. So number one is, do you have a financial plan? Because a financial plan clearly says for how many years are you going to be invested in the equity mutual funds market. Let's say if you're investing, it clearly indicates that from so many years to so many years, 10 years, 5 years, 20 years, you will be in equity mutual fund market. Number two, your financial planner has indicated in the financial plan that when your goal is coming near, for example, you have a goal in 2022 year and 5 years back you started investing in equity mutual funds. Now is the time he will tell you to start redeeming 6 months, 1 year before the due date. So he is now concerned not with the market ups and downs, but a date when you need money, let's say for your child's further studies, or you are due to retire. So that date minus 6 months, minus 1 year, he will start the shift from equity funds to debt funds. Number three is your risk profile. So what does your risk profile say? If it is 70-30, 60-40, then that indicates your. Number five is your asset allocation. How much in equity and how much in debt. So that's a balanced portfolio. So you must have a balanced portfolio which is clearly an indication of your total assets, which includes your FDs, your recurring deposits, your gold, assets in liabilities, your investments in real estate, and today at checking out point, how much is your equity fund and debt fund. So that number 6 is the rebalancing. So you have to do number 6 is the rebalancing. So you need to balance out that if it is higher in equity, it was supposed to be 60-40. Now because the market has taken your funds up by 20-30% in the last 1 odd year, so you need to rebalance. So you have to bring out that balance and shift out from equity to debt so that you have a balanced portfolio of the desired ratio of 60-40 if that's your risk profiling and asset allocation strategy given by your financial planner. Number 7 is, let's say your goal is now nearing its term and you want to, it's already, let's say you wanted to have a 25 lakhs fund, and now because of the market going up suddenly from 20,000, your fund has now become 25,000 and the market is today, let's say 50,000 as a Sensex. So redeem now, because don't wait that और पैसा और बढ़ेगा और अच्छा रहेगा. So don't be so much concerned about I want more profit because I got 30, maybe I can touch 50. So don't be greedy on that aspect. Number 10 is, do consult and have faith on your financial planner, because without the financial planner you are just picking up something which you don't know. You are looking at the market like a blindfolded man and they are looking at an elephant and saying this is this, this is this. So don't try and do that, because your investments are linked to your goals, your investments are linked to your asset allocation, your investments are linked to your how much money you need and when you need it. So it should not be that you are waiting for the market to still go further up, but then it crashes, and then you blame the financial planner or the investment advisor that I wanted 25 lakhs, now the 25, which from 20 to 25,000, that has already touched that level, but I should have redeemed at 25,000. It touched 30, but now it is 23,000. Don't blame the financial planner, because he told you redeem at 25,000. Last one is 11. Look at the funds closely. Your financial planner and investment advisor who is assisting you in your investment, let's say in mutual funds, should already be knowing that these funds are performing well or not. How does one do that? Look at another episode which I am doing, where I will explain how does your financial planner actually select the funds and keeps monitoring them, let's say every 3 months, 6 months. Because if the funds are not performing, you are not married to the financial planner, or he is married to the particular mutual fund company. So there are ratios, there are many parameters that I as a financial planner keep in mind when we look at mutual funds, when we look at our client's portfolio and how the funds are performing. We keep changing them if required. If it is not required, we are still monitoring it, because the ratios tell me that how going forward the fund will perform. So number 11 is trust your financial planner and also look at the funds. So with these 11 ideas, I'm sure that you would be very clear on what you wanted to know about the market corrections, whether you should be investing or not, whether this is the right time or not, whether you have made a mistake or not, whether you're doing fine, and lastly, are you happy with your investment plan? Are you happy with your financial planner? Are you still trusting him for giving you the best advice possible? Are you not looking at only returns, because that is not in my control and your financial planner's control. That is something which market controls. So focus on what you can control and have a common factor of the financial plan and what you would like to do with your money as the last point. Thank you very much. Keep watching. And this was Taressh Bhatia, your financial freedom specialist from the site on the Ganges behind me, River Ganges, in the district Devprayag. I wanted to shoot this in an outdoor environment. Of course, I've got a mic and I'm shooting with a professional camera, and I hope you like this video. Thank you very much. On 25th January 2021, this is Taressh Bhatia.